So welcome back to Financial Accounting 1. The purpose of this little mini lecture is to position you to do well on the third exam, which, as you know, is a take-home exam. Please, whatever you do, don't wait till the last minute. Assume that it's a take-home exam, that it makes it easier. I'm going to post this thing on Tuesday, and it's due back on Christmas Eve, the 24th, which is Saturday, and I don't think you want to be getting ready for the final arrangements for Christmas, trying to finish the exam. So I would suggest you get going on this thing sooner as opposed to later. And this little video briefing should help you understand what I want looking for in the answer to each question. And I'll also include some suggestions overall to help you do well. So first of all, it may sound kind of obvious, but sometimes with take-home exams, people don't remember this. Answer every question and answer all parts of every question. Right? I say that again, answer every question, answer all parts of every question. So what you're going to need to do is you're going to need to type up. I will not accept grade scanned documents. So type it up on the computer and send it to me either as a Word document or as a PDF. Don't send me an Excel document. You can work in Excel, but if you work in Excel, cut and paste your Excel work into some type of either Word document or PDF document, right? So I'm going to post the exam itself. Don't send me back the exam I'm going to send you, which is the PDF document, which I'm going to post up on Brightspace. But what you need to do is you need to do your solutions, answer each question. Question number one, you don't need to restate the question, just give me your response. Make sure you show your computations, make sure you show all your work. And when I send out when I post the actual exam, there'll be included transmittal instructions. What I'm going to want you to do is take the document that has your answers to the exam, and I'm going to ask you to email that to me directly. So you don't have to figure out how to upload it to Brightspace. It's just going to send it to my Suffolk email account, which I'll include in my instructions. Okay, so again, overall, make sure you answer every question, answer every part of every question, and make sure you do send me either a Word document or a PDF document that has your answers to all the questions. Remember, no Excel, no handwritten stuff. So it's got to be typed. All right, so without further ado, let me call up the exam. Now, you'll notice here that the questions, as we go through each one, the first one is worth 10 points. So some questions are worth 10 points. Some questions are worth 15 points. And I think there's one question that may actually be worth 20 points. So you want to do well on every question. You want to also be mindful that depending upon how extensive the answer is, the number of points varies. So in this first one, question number one, you give you all sorts of information on the purchase of a piece of land. And the question is that you need to answer, and don't just give me a number, show me how you arrived at the number. What is the amount that'll be recorded on the balance sheet as the cost of the land? So some of those costs are included in the cost of the land, some of them aren't. You need to tell me what all those costs individually, which ones become part of the cost of the land. So you're going to come up with a total cost of the land, and you're going to actually show the little components that you considered. You don't have to show me the stuff you didn't consider, but you do have to show a separate line item for each item that you included in the cost of the land. Not dissimilar to the in-class exercise that we did, was very similar to this. Question number two. This one is thought-provoking. So we've got a company that purchases a piece of equipment, and what you need to be able to do based on the information that is given there, based on its cost, based on its salvage value, based on its useful life, which is both in years and number of hours. Part A, and make sure you clearly indicate the answer to Part A. You've got to compute the annual depreciation for all 5 years. Okay, so you got to show computations for each year, for all 5 years, what depreciation is on a straight line basis, and what depreciation is on a units of activity basis. So I need to show some type of schedule that shows how you got the depreciation and what the total amount of depreciation was each of the 5 years under both straight line and units of activity. Or it's also called units of production. And now B, separate answer. If you were the administrator of the clinic, which method would you deem as the most appropriate? So choosing between straight line and units of activity, if you're the administrator of the clinic, which one would you choose and why would you choose that method? And then in C, which method would result in the lowest reported net income the first year? Which method would result in lowest reported income over the 5-year period? So there's two parts to that question. The one that shows you the lowest net income the first year, and then which one would result in the lowest reported net income over a 5-year period. So if you get a difference between the two over the 5-year period, then let me know which method, which is going to show the lowest reported net income over the 5-year period. If you get the same result after 5 years, then you'd be indifferent in terms of which one. But again, answer C and justify your answer for C. All right, so separate. A, both methods for 5 years, straight line units of production. B, if you're the administrator of the clinic, which method would you deem most appropriate and why? Justify your answer. And C, what gives you the lowest reported net income the first year, and which method would result in the lowest reported net income over a 5-year period? And if you think they're going to be the same over a 5-year period, tell me they're going to be the same. Number 3. So here we have a piece of equipment. The piece of equipment was, they told us how much it cost. They told us how much accumulated depreciation it had on January 1st. It told us what the depreciation was for the first 6 months of the year. And now what you want to do is you want to come up with the journal entry to show, to record the sale. Right? So you're going to have a particular journal entry that you make to record the sale. You may have gain or loss. So you may have a gain or loss account involved here. And when you record the sale, there are certain accounts you have to use in addition to including the amount of cash which was received, which was amount of cash that was received was $75,000 on July 1st. So what's the journal entry to record the receipt of the cash at July 1st? And what are the other debits and credits? Remember, your debits have to equal your credits. And if you sell a piece of equipment, you may in fact have gain or loss. So you've got to show what that gain or loss is. Okay, looking for the journal entry there. So I forgot to mention the points. So the first one was worth 10 points. Second one was worth 15 points. Third one was worth only 10 points. Now we're up to the fourth one. Fourth one, which is worth 15 points. So the company issued 5,000 shares of stock, and you've got to prepare a journal entries under 4 different assumptions. So let's assume the stock had a par value of $5 and was issued for $65,000. What's the journal entry? What do you debit? What do you credit? B, the stock has a stated value of $5. So record that transaction. What's the debit? What's the credits? C, the stock had a par value of $5 and was issued to attorneys for services in corporation, and the services were valued at $65,000. So what do you debit? What do you credit? And the stock had a par value of $5 and was issued for land worth $65,000. What do you debit? What do you credit? So A, B, C, D, separate journal entries for each, different assumptions for each. So each of these things stand on their own. So each one of these things, you need to show a journal entry, you need to show the debits, and you need to show the credits. That one is worth 15 points. Number 5, this is the biggie. This one is worth 20 points. So here are your stockholder equity balances at January 1st. So here's your common stock. There's your paid-in capital. I guess we call that our Phoenix account. And there is your retained earnings. So that's as of January 1st. The company uses the cost method to account for treasury stock, and during 2020, following treasury stock transactions occurred. So these are the transactions. So you have to do journal entries for April 1st, August 1st, and October 1st. So you got a purchase of the shares on April 1st at $18 a share. You get a sale for 4,000 shares at $22 a share, and then sell another 4,000 shares at $15 a share. So separate journal entries associated with each one. And then after recording all 4 of those journal entries, come up now with the stockholders' equity section of the balance sheet. So this is going to have it's going to reflect your beginning balance plus all the changes that you made as a result of the journal entries. Come up with the stockholders' equity section of the balance sheet. Right? I think there was an in-class exercise where you had to do a stockholders' equity section of the balance sheet or partial balance sheet. So you got to do the journal entries in A, and B, you've got to show the stockholders' equity section of the balance sheet. And remember that stockholders' equity section has different sections within it. So take a look at that in-class exercise that we did. Okay, number 6. So number 6, this is something we're going to talk about in class on Wednesday night. So you are going to prepare horizontal analysis on the balance sheet, and then you're going to do vertical analysis on the balance sheet. So horizontal analysis on the balance sheet is something we're going to talk about in class on Wednesday night. Horizontal analysis, basically what you do is you compute the amount of the change that occurs, and then what's the percentage change. So horizontal analysis, so you're going to be focusing on the change between 2019 and 2020. You come up with the dollar amount of the change, and you got to express that as a percentage. So that's part A, prepare horizontal analysis. And part B, you're going to do vertical analysis. Now, vertical analysis means you're going to express every item on the balance sheet for both for 2020. You're going to express that as a percentage of something. So we learn how to do vertical analysis in class on Wednesday night, and also there's a in-class exercise where we do vertical analysis. Right? So do both. You do the horizontal analysis and you do the vertical analysis. And that one was worth 15 points. And then question 7, also worth 15 points. You're given these balances here. And on the basis of those balances, what you need to compute for 2020, inventory turnover times interest earned, debt to asset ratio, accounts receivable turnover, and return on assets. So don't just give me a number in those little slides there. Tell me what the number is for each of them. Label them 1, 2, 3, 4, and 5. So label them separately. Show me your computation and give me your answer. Okay. So that concludes the briefing on the take-home exam. I hope you found it useful. You might want to, as you watch this video, if it hadn't occurred to you beforehand, you might actually want to have your exam in front of you. And remember, you're going to have to complete that, and you're going to have to email it. I'll give you instructions on how to do that when I post the exam on Brightspace. So I look forward to seeing you Wednesday night, and enjoy the rest of your week. See you then. Bye-bye.